important thing to note, which is that if you look at the MAU growth of Snap, it's actually been extremely steady. And they've had an incredible march forward. And I think that they're roughly around 350 million. It's a service that is incrementally every day more relied upon than the day before. And it's a service that's providing a set of features that is incrementally more important to a larger and larger group of people. So how do you then square that with its stock performance? And in my opinion, I'll just be really honest with you. And I don't know Evan Spiegel, and I've never trafficked in Snapchat at all. Okay. But it is the most glaring example of corporate misgovernance that has ever happened on the internet. And the reason is when you look at what happened in the IPO, it basically created a governance structure where the common shareholder had all voting power taken away. So 100% effectively, the de facto voting power stayed with the class that was held by the founders. And so you do not have a normal check and balance. And it was egregious. Other companies would have voting programs where it was 20-1. And you would sometimes say, oh, it only should be 10-1, or it should be 50-1. This was like 100-0. And what you have now is no real feedback loop because there is no person who can own enough equity with enough say to sit across the table from that CEO and say, here's what you're not seeing and here's what you're getting wrong. And I think you're always better off by having those kinds of people be able to get a meeting with you in the first place and have a vested interest where you take them seriously. But how would you receive a meeting when you're sitting across the table from somebody in the back of your mind, you're like, wow, this person has literally no say in what I do after this meeting ends. Literally none. You can't vote.
I think you can agree, that there is a separation between, the voice of the common shareholder in these companies and the direction of the companies. But I think it obscures what's going on. Chamath, I totally agree with you. If you look at usage, the number of customers walking into the store, Snap's gone from 265 to 360 million DAUs. Twitter, 190 to 240. Meta, from 1.8 to 2 over the course of the last 3 years. They're all growing. More people are walking into the store and using the service. The story here is all about pricing. How much is each of those users worth? I mean, Apple is the apex predator of this entire market. We wouldn't be having this conversation but for the fact that Apple's changes with IDFA literally pickpocketed the industry $2 billion this year under the auspices of privacy. And so if you look at these companies, usage up, pricing or ARPU down, okay? Recently, Apple's come under a bunch of pressure, so now they're out with SCAD 4, which is their update to the ad policy post IDFA. That allows you to target advertisers or individuals with 10,000 attributes instead of 100 attributes. So we're going to see some realignment. I expect that the real question is what happens to ARPU next year. But to me, the story here is that the usage and the health of these core platforms is remarkably sticky.
Yeah.
For all the things we say about Instagram, I mean, TikTok has had explosive growth, 30% growth each of the last 3 years. But even the incumbent platforms, really sticky usage. This is about how they're monetizing those users. And the real story is Apple.
Right. Have you ever owned Snapchat stock?
No.
Why not?
Certainly, governance is a key component of it. But the second thing is,
like, do you have any belief that you could even get a meeting with the CEO and management where they would listen to you appropriately?
We've certainly got meetings with management before. So yes, I believe we could. Whether or not that impacts, how they build product, how they run the business, the influence, et cetera. But again, I think that's not really the problem here. But the point I would totally agree with you on, Chamath. We've had 10 years of where the cost of capital was zero. 10 years of hypergrowth for these social networks, right? In each of the last 5 years, Facebook has hired more people in each of the last 5 years than they had 10 years after the company was founded. Okay. So as we've seen this growth begin to turn over, I have seen the companies really slow to react, to right size their behavior that they had over the course of the last decade, to put themselves in a position to compete for the next decade. So it's one thing just to throw your hands in the air and say, well, this is all Apple. We couldn't do anything about it.
There's a perception, though. I mean, I'm still stuck on this issue. I really think that stock prices tend to ebb and flow based on sort of like friction or momentum. And when there's momentum, more and more people can easily underwrite it. And when there's friction, fewer and fewer people can underwrite it. And so I think that if you are a CEO of a public company, you have to think about how many headwinds do I have and how many tailwinds do I have all the time? And some of them are in your control and some of them are not. At least in the case of Meta, as with Apple and Google, Meta is forced to copy the best decisions of these bigger companies. Why? Because they were one of those biggest. Now, may have been the smallest of the biggest, but it's going to be very hard for Meta eventually to not converge on those same set of decisions. And the most important one is what Brad just alluded to, which is that there was a point in 2016 and 2017 where you literally could not give away Apple stock. And the big turn of the dial, and some say it was Carl Icahn, who knows, was this theoretically this famous dinner that Carl Icahn had with Tim Cook, where he laid out a plan. And it's like, listen, you need to start managing costs better, managing OpEx better, return a ton of cash, buy back the stock, and you'll be a darling. And Tim Cook was rewarded. And he's been rewarded with an incredibly performant company. And so, Google is slowly inching towards that plan. Microsoft is in that plan. And so the only big four horsemen that hasn't really gotten the script yet is Meta, but they will. We're just debating when. And so there's a perception that, Meta will copy what the rest of these big guys do. But these other long tail companies, the headwinds are just greater. And so when you don't have a company that can be broadly owned by intelligent, thoughtful investors, that's a headwind, right? When you give nobody votes, that's a headwind. And so that's why you see a company that's continuing to grow impact, not being able to translate that into economics. And if I were the board of that company, that should be a wake-up call, because eventually that'll flow into the morale of the employees and the ability to retain, and then the ability to invest in the future. And I think the simple answer is enough with all these, gymnastics around control. If you looked at Elon, the most incredible thing from day one was there's common stock, and his whole thing was like, I'm just going to do the best. And you know what? If I'm not the best, I'm going to be out.
He literally said, if you guys want to vote me out, vote me out.
Vote me out. He's never, ever played these games. So in this funny way, control is a symbol of a lack of ability to run the business. Masterful mastery of a business, you can translate that to being, I'm just going to have common stock.
When Facebook was doing really great and Snapchat was doing great, nobody complained about super voting stock. Okay. So I think that, my preference would be that I partner with a company where I know the founder, whether irrespective of their votes, right, listens, cares, and has the mental flexibility to make course corrections, right? And the reality, what I'm trying to point to, we have lived through a decade of excess. Everybody knows all these companies could do exactly the same revenue with vastly less investment in terms of people, etc. Right? A 20% RIF at Meta would literally only take them back to where their personnel expense was in 2021.
Yeah.
Nobody argued in 2021. This is part of the problem, Jay Cal. Everybody, so why 10%? Why 10%? You've doubled the number of people working in the business over the last few years, right? There's nothing magical about 10%. The real question is, what is the optimal number of employees to produce the best outcome for our customers and our advertisers? And what Bill Gurley has pounded on, and we've all talked a lot about, there has been in a zero cost of capital world, a unilateral march to more of everything, invest in everything, hire more people, Silicon Valley would do itself a favor. These big companies vacuumed up every single engineer in Silicon Valley. They ought to return that pool to the startups that are actually inventing the future. They don't need this many employees. I mean, last night I read a report, came across Bloomberg, that Elon's talking about 75% reduction at Twitter.
Ultimately, guys like us who have to buy the stock when these things go public will say, nope. You want to have these... You want to have these dumb governance games? No, not for me. I'll just go buy something else. I'll go buy more Tesla where it's one person, one vote. Why, so it's hard when the best CEO in the world is like, judge me, keep me, fire me on an equal basis. And everybody else is like, I'm smarter than this guy. And so, you know what? Let me make sure that whenever I feel like it, I can throw a temper tantrum and take my toys out of the sandbox.
And let's use there's an analogy here.
It doesn't work.
Look at Steve Jobs, ousted from his own company. Company made a huge mistake ousting him. Some people argue it was a learning experience for Steve to get better at his job. He comes back and he absolutely turns the company around. So there's an example.
Thus far, you've proven that the two most impactful and important CEOs of the last 50 years had the courage to basically say, let my performance do the talking, not my protective nanny control.